Let's bring in Yanliang on that point because the critical part, Yanliang, on all of this OPEC plus decision making to increase supply is where is demand at in China? It's been the biggest question of the first half of this year. A lot of the sort of general reporting and research, market research has indicated China weakness from an economic growth point of view, and with that energy demand point of view. How has the first half been the China's last quarter? Is OPEC increasing supply into a weak China demand? How has the first half of this year gone for China, particularly given the stimulus efforts that they've made?
Yes. Well, first of all, uh, thank you for bringing me to this podcast. I'm
An
very
honor to
glad,
have you.
yeah,
Absolutely.
together with my old and good friend Christoph. On China demand, oil demand, and Chinese economy, I think the first half has proven, to be very resilient, despite several challenges, right? We have seen a few challenges, including the tariff shock, and then there's other global uncertainty. But as you mentioned, I think the turning point is really from last year, from the stimulus plan carried out since September last year. Now I think, if we think about the demand related to the Chinese economy, the number one, of course, is really, the cyclical activity, the transportation. So last year, China's apparent consumption is 750 million tons. That's translated to about 15 million barrels per day. I
In
think this year,
2024.
2025, that's 2024, yeah. This year, is probably similar, probably like a slight increase, like around 1% of the apparent oil consumption demand. Um, so on this apparent consumption demand, there's two parts. Uh, Slightly over half of it is on transportation, gasoline, refined oil. Another half, like slightly less than half, is for chemical product, feedstock for chemical product.
So half of the
I
15
see,
million is for mobility transport, and half of the 15 million
yeah,
barrels a day is deployed for petrochemicals, Fox
exactly,
feedstock.
exactly, yes. I think on this, going forward, I think, we have to watch a few, key factor. On cyclical factor is really, how, the economic activity, whether people are moving, they're traveling, uh, take air flights. I think that's clearly, I think, is rebounding. And then, but we have to notice that there's a huge structural shift in the Chinese economy, namely the new electrical vehicles. They represented a ever larger share of the Chinese transportation tools. This year, last year, like 45% of new sales of cars is in EVs. This year will be 55%. And then 5 years from this year will be 75%. So the new EVs, they're taking an increasingly large share of, of
It,
the transportation method.
if I might just, in looking to that point, I just wanted to get your precise opinion on it. The
Hmm.
stimulus program that the Chinese government started in the fourth quarter and continued through into the first quarter, uh, a lot of it seemed to be small, bite-sized stimulus rather than any big bazooka, as we might say in the English language, like any large, massive, like we saw in the US during the COVID period, they had some massive stimulus programs.
Yeah.
They even sent checks to people directly in their homes. Uh, China's stimulus on this occasion seems to have been bite-sized and incremental, and so its
Yeah.
impact less. Is that a fair assessment, or how do you see it?
Yeah, I see it, there's always two. balancing forces here. One is, the need to stimulate, to do counter-cyclical stimulus. The other is to guard against moral hazard. In China's case, is really, the local government. So local government in the past, they have borrowed a lot. They have relied on land financing. They sell land, and then for to commercial developers. Now those developers, they build real estate, and then they sell to consumers, or even to commercial real estate. But that model has come to the past. So I think now here is it's really a tug of war between fiscal discipline and then the need to stimulate. But I do think the balance has shifted now to be more stimulus. Probably we also need to be, uh, patient on that, because China has taken a different approach from helicopter money, right? I mean, you get helicopter money to people, and people can go and spend the check. Now China is they do more on not traditional way. Traditional way is like infrastructure, real estate. Now I think we increasingly focus on soft infrastructure, like or to update the old neighborhood, city infrastructure, all this. And then I think recently the Chinese government has just announced that they're going to give financial support to every new birth, from 0 to 3 year old. So in all this area, it takes some time. Some of the big things they announced, like debt swap program, that's very fast to ease the financing constraint of local government. But some other area, I think you see program one by one, in the pipeline. So yes, I think it's not a helicopter money bazooka in that sense. But in terms of policy shift, no doubt. I think that's linked to this peak oil debate. Maybe in terms of a share of oil out of global source of energy, you can see a share in terms of percentage, maybe peak. But even in terms of the absolute amount, I don't think it's there, because even if you stimulate going to services, whether it's data services, AI services, those things the consumer, even I think in terms of absolute amount of energy, consume even more energy. So that energy can come from new sources of energy, but it also can come from traditional you know carbon and other source of energy. So in that sense, I do see that maybe the new stimulus different from the older stimulus is probably more services, more consumption oriented, but it doesn't necessarily translate into less absolute demand for oil. Maybe, more demand is in the new energy, but even in this new energy, there's some of them, they consume a lot of electricity, and some electricity is generated by the traditional source of fuel.
Yanliang, what about from a China perspective? We saw in the second quarter one of the biggest stories and economic impacts was the China-US trade war when they both went above 100% tariffs. They've pulled
Hmm.
back from that, but again, that's still an
Hmm.
interim situation. How is China performing, sustaining its economic growth through
Hmm.
this tariff trade face-off with the US?
Yeah. Yeah. I mean, you know, even when the very exorbitant high tariff rate came out to China, I always said, tariff is a blessing in disguise, uh, because it will help China make the right decision. I mean, the decision is always, when China's economy needs rebalancing, we need rebalancing from investment to more consumption. So I think, China is not afraid of tariff. If anything, tariff will, only make the stimulus more urgent. Okay, that's originally how I view tariff. Now we see a couple rounds of negotiations. Tariff has now come down to more normal level. There I see, a few things stand out. Number one, China's manufacturing resilience has been proven again, whether it's US reliance on Chinese goods, or China can re-export through other countries, or Chinese manufacturers, diversify its own supply chain to other countries. That's number one. Number two, in this several rounds of confrontation, you can clearly see that, I mean, to me, I think, uh, China has proved it has more leverage than many people thought. Um, you see news come out in the recent week that, US actually has loosened its export controls on China. So in that way, I think it's actually good news for the Chinese economy. Taking all this together, I think, in terms of the macro number, uh, whether it's export number, import number, and then linked to the PMI, I think for the first half of the year, you will be comfortable to achieve a 5% growth because some part is a low base from last year. So last year is a huge fiscal tightening, but then shifted towards the second half of the last year, it become a fiscal easing. So I'm not worried about the economic growth rate. But I think in the longer term is really how China engineer a rebalancing and how we achieve a soft landing. Yeah.
Yang, I wanted to get your thoughts because one of the big questions about the outlook for the second half of the year is China's energy security. Even if China's demand or consumption, as you mentioned, is consistent around 15 million barrels a day, half for mobility, half for petrochemical industry. But what about for energy security purposes? China might actually continue to buy more oil to put into, for example, inventories. How do you see China's energy security strategy evolving into the second half of 2025?
Yeah, well, when I mentioned this 50 million barrel per day, I call it, apparent consumption. That of course doesn't count inventory, demand. Um, I do think, in this new world that, many countries, they do have an incentive to build buffers, whether it's a energy buffer or it's a chemical buffer or a precious metal buffer, all this. So, but I'm not an expert in that area, digging into, what's the right amount of inventory. But I want to leave you is, um, you think about in the longer run, what's really driving China's oil demand is other than, gasoline, travel, chemical product. There's a third component is, the Chinese economy is becoming more efficient. For the past 3 years, every year, the unit energy consumption of the GDP is actually declining by almost 3% year after year. So it's still become, more energy efficient. Part of it is become, even in this industrial production process to become efficient. The other is, of course, is linked to more of the GDP is now generated from, the new energy sector. So those doesn't consume the traditional, the less traditional energy focused. So from that stance, I think probably, we think about maybe the in the past, China has always been the largest, demander for oil. But in the future, I
The
think
world's largest
it's going
oil
to be
importer.
importer. Yeah, I think in the future will be slightly different. It's not. It doesn't mean that come down, but it actually means the component will be different.
If we might just, as we wrap up, go to what could surprise the markets the most in the second half. Yanliang, what do you think could surprise the markets the most about China's external balance and commodity imports?
Huh? I would think, um, tariff may actually. You normally people think a tariff would reduce exports from China, but because of this, the way tariff has been imposed and then lifted, it may actually boost Chinese export. Yeah, for the time being. Yeah.
But isn't that the problem? I mean, you're getting in a lot of trouble now because a lot of countries are reacting to sort of dumping of steel and dumping of EVs, and given the US market, that a lot of
Yeah,
other countries are
I
reacting
think it's
against.
the problem is like it's a shock, right? You can call it a type of shock, but it's more a demand shock, also a a confidence shock. It's more a confidence shock. So that's a shock is not originated from China. China is passively accepting the shock, and then this shock is whole global manufacturing system. It's a shock, but it's not of China's origin. Yeah.
And in that, through the second half, you're confident that the China demand will continue in and around 15 million barrels a day.
Yeah, I'm confident on that. I think, if anything, I think, probably from, trying to get out of the low inflation zone, China probably need to push down the gas pedal even more heavily in the second half of the year.